Okay, quick quiz on some of the things we did with cash flow statement. So, accounts payable, 2012, 2013. First of all, I want to know what account type it is. Then I want to know whether the account went up or down. Then I want to know whether it's operating, investing, or financing. And then I want to know if the cash went up or down. So, type of account, well, current liability. Did the account go up or down? Well, the account went from 20,000 to 33,000, so it went up, plus 13,000. Operating, investing, or financing, that would be operating. Cash up or cash down? Well, we memorized from last week that if it's a payable that goes up, then the cash goes up. Okay. Depreciation, amortization. Well, in 2012 was 40,000, and 2013 was 55,000. But we don't really care about 2012. We're only looking at the latest year. And it comes from that particular number, the income statement, or the expense comes from the income statement. Okay, so it's all the 55,000. It doesn't really apply whether the account went up or down. It just is operating income or operating, investing, or financing, and it's operating. Cash up or cash down? Well, there's a bit of a trick question because it wasn't cash at all, so we're adding it back in. So we count that as a cash up, the whole amount, that is. Okay, so accounts receivable went from 59,000 to 100,000. Type of account, that would be a current account, current asset. Account up or down, well, it looks like it went up a fair chunk, so 41,000 up. Operating income, interesting. Oh, golly, I'm having a hard time with that. Operating, investing, or financing. And it's operating. It's a current account. Cash up or cash down. Well, when an asset goes up, the cash goes down. Okay. Inventory went up. It's also a current asset. It went up $18,000. Operating, investing, or financing. Still operating. It's a current asset, current liability. It's a current account. And because the asset went up, the cash went down. Notes payable. We consider those current liabilities. Okay, and the account went up or account went down. It went up $6,000. Now, just notice that in 2012 was 120,000. They would have got all paid off in 2013. Okay, but during 2013, we added another 126, but we don't count the whole 126. We only count the difference in the two because we're trying to figure out the difference in our cash from one year to the next. So we count the 6,000. Operating, investing, or financing is definitely operating. And it's a liability. So liability up, cash up. Term loan. Okay, a term loan usually means it's a loan for 5 years, 10 years, something like that. And we assume that they're a long-term liability. Okay. It went up a bit, so we added to it. Now, this is something that started out as 45,000. When we do that with a term loan, we actually go back to the bank and borrow more money with the term loan. So they might have rewritten us a new one. It wouldn't have been paid off in 2013. The end of 2013 was higher, so we probably went back to the bank, said we need more money. Let's increase the amount of the term loan. Amount of the term loan, of course, went up $5,000. Operating, investing, or financing. It's obviously financing. And cash up or cash down. Well, it's a liability, went up, so the cash went up. Loan from shareholder was nothing. 2013, it was 8,000 in 2012, so it actually went down. Okay, we treat those as long-term liabilities. Okay, so the account went down. Got brackets around it. Operating, investing, or financing, we consider that financing. I don't know why there's no one there. There should be an F. Let me change that. It's a long-term asset, so it should be an F. Okay. Cash up or cash down? Well, we paid something out, so cash down. Liability down, cash down. Earnings after tax. Oh, bit of a trick there. Okay, we only look at last year's net profit. It's also known as net profit, earnings after taxes. So our cash actually went up, in a sense. Earnings after tax. Yeah, it should have gone up. Oh, sorry, the account itself didn't go up. Oh, goodness, it's operating. And that would be cash up. See, I got myself confused there. Just thinking of the cash when I should have been thinking of the account. So the account itself didn't really change because we only look at the last year. But because of its cash value, it went up $34,000. Equipment went down. Oh, that's pretty rare. We don't do that too often. Long-term asset went down 25,000. Operating, investing, or financing. Well, that's actually investing. And our cash would go up. So an asset goes down, our cash goes up. Dividends. Well, same trick question here. When I look at the last year that we paid it out, so that'd be 150,000. The cash or the account plus or minus didn't really change. Operating, investing, or financing. Well, dividends are always financing. And because we pay it out, it's cash down. Okay, so that's just a quickie little review for us.